I'm Frank Bitzer, the National Director of ERISA Consulting for Marsh McLennan Agency's Retirement Plans and Wealth Services. The SECURE 2.0 Act has substantially changed retirement account rules in the United States, and it directly impacts retirement savings plans, including 401k, 403b, IRA, Roth accounts, and related tax breaks. Now, the main objective of SECURE 2.0 is to encourage more workers to save for retirement. However, some of the complex changes have caused confusion for taxpayers and plan sponsors. Today, I'm going to focus on the 5 new provisions that start in 2025. Automatic enrollment. Section 101 of SECURE Act 2.0 mandates that 401k plans with a cash or deferred arrangement established after December 29, 2022 must include an automatic enrollment feature and an auto-escalation feature, initially effective for plan years beginning after December 31, 2024. However, there are exemptions. Simple 401k plans and simple IRAs. Governmental and church plans. Plans sponsored with fewer than 11 employees. New businesses during the first 3 years of existence. And it's important to note that IRS Notice 2024-02 clarified that a 401k plan is considered established on the date that the plan terms are initially adopted by the plan sponsor. 403b plans established after December 31, 2022 are subject to the auto-enrollment and auto-escalation requirements. The notice also addresses the application of these requirements to plan mergers and plan spinoffs. Catch-up contributions. Section 109 of SECURE Act 2.0 states that effective January 1, 2025, there will be a higher catch-up contribution limit that applies at ages 60, 61, 62, and 63. The new limit will either be $10,000 or 50% more than the regular catch-up contribution limit, whichever amount is greater. And this amount will be adjusted annually to reflect the current rate of inflation. Contributions toward the catch-up limit automatically start counting if the participant meets the annual elective deferral or annual additions limit. Additional guidance or clarification on Section 109 has not been provided by the IRS. However, we do anticipate some being issued in the near future. Long-term part-time employees. Section 125 of SECURE Act 2.0 mandates that for plan years beginning after December 31, 2024, employees who perform at least 500 hours of service during 2 consecutive 12-month periods must be eligible to participate for purposes of deferrals. Now, service prior to 2023 is disregarded for these calculations. The rule applies to both ERISA-covered 403b plans and 401k plans. Certain employees, such as those covered by a collective bargaining agreement or non-resident aliens with no earned income, are exempt from this rule. Distributions for long-term care insurance. Section 334 of SECURE Act 2.0 states that effective January 1, 2025, defined contribution plans can distribute up to $2,500 annually to pay long-term care insurance premiums. Distributions for long-term care insurance premiums are exempt from the additional 10% tax on premature distributions. The permitted distribution amount is the lowest of the amount paid for insurance, 10% of the vested accrued benefit, or $2,500, which will be indexed for inflation. Plan sponsors have the discretion to include or exclude these provisions in their plans. Plan amendments. IRS Notice 2024-02 extended the amendment deadlines for plan changes by 1 year. The deadlines for both the mandatory and discretionary amendments are as follows. Non-governmental plans must be amended by December 31, 2026. Collectively bargained plans have until December 31, 2028. Governmental plans have until December 31, 2029, and now potentially that could be later for certain governmental 457B plans. Non-governmental 457B plans must be amended by December 31, 2025, although that may change. We're keeping an eye on that for you. For assistance regarding these changes, please contact your Marsh McLennan Agency representative. We're always here to take the time that you need to understand these new rules and your obligations as a plan sponsor.